Welcome back. You're still watching Markets Today on CNBC-TV18. Well, the fourth headline today, Gland Pharma tumbled over 14% after reporting a disappointing result for the second quarter. The margins declined on a quarterly basis from 31% to 28%. Ekta joins in now with the key highlights from the pharma company's results. Ekta, over to you.
Well, yes, definitely a disappointing set of numbers which is coming for Gland, especially on the margins. Now, the revenue declined around 3% The street was anticipating a 9% decline, so that's better than expectations. But the margins came in at 28.5% or thereabouts, and the street was anticipating at least 31 to 32% in terms of margins. Now, profit also missed estimates. Profit came in at around 240 odd crores. Street was anticipating around 250 odd crores. In terms of a couple of key points or segments, their core markets, which is basically the regulated markets, they get 75% from the regulated markets such as Europe, US, as well as Canada and Australia. That was up around 3% on a year-on-year basis, but India continued to decline because of issues such as a high base as well as supply disruptions. So last quarter it was down 70% year-on-year. This quarter it was down 40% on a year-on-year basis. But what seems to probably support Gland in the larger scheme of things is the net cash, which is still strong. So 3,800 crores plus of net cash on their books. And separately, the valuations. Yes, fresh 52-week low for Gland Pharma. It's corrected over 50% from the highs that it's seen in the past 1 year. It's trading at around 20 times 1 year forward versus peak valuations of close to around 40 times. Now, brokerages are disappointed as well. Multiple brokerages have cut their target price, though they've maintained their ratings, such as Bernstein, Goldman Sachs, as well as Incred, as well as Citi. And the likes of Jefferies has downgraded the stock to hold with a target price which is cut to around 2,241 rupees as well. Brokers have said that the margin decline was largely led by a change in mix as well as competition. Bernstein says a supply resolution and new capacity should help in terms of supporting recovery. Multiple brokerages have cut their EPS as well as earning estimates.
Okay, stay on, Ekta. Many more updates from the pharma space today. Both Glenmark and Lupin were on our radar as well, following the latest U.S. FDA observations. Tell us a little more about that.
Well, it seems as though the U.S. FDA regulatory risk seems to be re-emerging for a lot of the pharmaceutical companies. So for Glenmark, the fresh news is that their Buddy facility has received an import alert from the U.S. drug regulator. What an import alert means is that fresh products from this particular facility or drugs from this facility will not be allowed into the US markets. Now remember that this particular facility was already on the fence for Glenmark. It had a warning letter issued to it in 2019. It was re-inspected in June 2022. It received 6 observations then. After that, in September 2022, the US FDA did say that the official action indicated status will continue on this particular plant. So the street was anticipating that yes, it could be set for some amount of bad news, and that's exactly what's happened. The Buddy facility is only around 1 to 2% of their FY22 US sales, but it puts into light the risk of other regulatory actions on Glenmark, because Glenmark in the past has had quite a clean record when it comes to regulatory risks, and this probably makes investors fear that there could be other issues which might emerge in the future as well. For example, their Goa facility, Monroe facility too have some regulatory risk outstanding currently. Lupin separately, CNBC-TV18 accessed the Form 483 which was issued to their biotech facility in Pune. They received a whopping 18 observations for that particular facility, which was inspected just in the month of October, and the observations, for example, around aseptic processing, monitoring, lack of adequate product evaluation, remedial action on actionable microbial contamination. So the street is fearing that it could be probably a longer road ahead and doesn't bode too well on a larger scheme to receive 18 observations for a biotech facility.
Okay, thanks a lot, Ekta, for that.